Alright guys, we're back here for another video. I actually have a rental house that I am thinking about refinancing, so I've got my #1 mortgage lender, Tripp Davis, here with me, who by the way is terrified to be on video. Drop a like and share and subscribe and put a comment in there that Tripp rocked this out and gave you some great info. Alright Tripp, so here's the situation. I have a house I'm thinking about refinancing. I've owned this house since 2006. It's a rental property for me now.
Okay.
It's worth about $185,000. I currently owe about $105,000 on it.
Okay.
My existing interest rate on this house, because I bought it in 2006, at a 5.8% interest rate.
Okay.
So guys who are complaining that rates are back up in the low fives now, in 2006 I got a 5.8, and that was about the going rate back then. So hey, we're still historically low right now. So Tripp, walk me through this. It's just a simple math formula on whether you should refinance, right?
Right.
So how does this work?
So the first thing that we jump out and think about is how long is it going to take we want to know how long it's going to take to get your money back to determine whether or not it's worth the cost of refinancing. If you owe $105,000 and you were able to lower your rate by say 1%, as if you're at a 5.875 rate and you were to drop it to 4.875, which would be a market rate for an investment property, that'd be a 1% savings on $100,000. It's about $1,000 a year for the next several years. So we look at the total cost of it, and if the cost is $2,500, you would get your money back in about 2.5 years. And then we would just put the ball in your court to make a decision of, hey, do you plan to hold it long enough to get your money back on the 2.5 for 2.5 years, and every month after 2.5 years you would start to profit from the investment in refinancing.
Okay, so I'm actually thinking about maybe selling this property when the current tenants move out because prices are high right now. I like to buy low, sell high. Good investment strategy, everyone watching.
Right.
All right, so Tripp, if I had favorable terms on it and I was cash flowing a little bit more, I would definitely keep this house as rental. So right now the principal and interest are currently about $850 to $900 a month.
Okay.
At the 5.8. So if I refied, what would that, if you want to put it on the board you can, but what would that take the numbers to currently with 105 for the current balance on the house?
I can't calculate a 4.875 versus a 5.875 on $105,000 in my head.
He's real smart though. He's a good numbers person, which is why we send a lot of buyers his way.
Yeah. If I had to guess, it would be about $100 a month reduction.
Okay.
To drop it from 5.875 to 4.875.
Okay.
And so again, you're going to spend about $2,500 on refinancing and costs that you don't get back, attorney's fees, lender's fees, appraisal, etc. And then saving $100 a month would get you, somewhere in the 2.5 to 3 years range to recoup your investment of that. So if your tenant was going to be moving out in less than 2 years, then I would not advise refinancing.
Sure.
Really, if you were going to hold it for 5 years, then I would say it would be worth doing. But anything less than that is probably not worth the cost of doing it.
I got you. So here's where this house is. It was new construction when I bought it in 2006. So the reason I'm thinking about selling this house soon is prices are up right now. And because it was built in 2006, that means I currently have a 13-year-old roof, a 13-year-old heating and air. Some other components of the house are getting, mechanical components that are more expensive or getting to the point where they might need to be replaced. So it seems like it might be a good time to cash out when the current tenant moves out, whether it's this year or next year. They're month to month, but have given no indication. So, maybe on this one I'll just keep this house until they move out, and then I'll sell it, and then I'll reinvest that into a different property, maybe a multifamily or something to get rentals on.
Can we talk for a minute about owner occupants and people watching the video, what they might think to help analyze their own situations?
Yeah, absolutely.
Okay. So if you're in a situation where you owe $200,000 or more and rates are, for owner occupant rates might be lower right now, in the low 4s. If you're over 5 and your amount that you owe is fairly significant, rates don't have to be a whole percent lower. I mean, if you owe over $300,000 for as little as a 0.5% difference, it could be worth your while to refinance. So I would definitely say let's have a discussion about it and see where you are and see whether it makes sense to you and what your recapture period would be on the refinance.
So guys, you don't actually have to know how to do this yourself. You just have to know to call someone who does know. I'm going to put Tripp's contact info below, so if you just look at the video description, it'll have Tripp's online application, his phone number there if you want to reach out and have Tripp run your scenario and see if it works. Again, make sure you click the like, share, and subscribe for me. Thank you for watching.